One of India's largest real estate company chooses to IPO, and that should happen by August 10, the September 1st week. And we have none other than Abhishek Lodha himself speaking with us for the first time to a television channel. Abhishek, such a pleasure having you on the show. Was I right? The first TV interview?
I think we haven't spent too much time with the media in the recent past. So
get used to that. You're choosing to list. But tell me, as I jog my memory, even in 2009, you had filed for IPO papers, and now after such a long gap, almost a decade, you're planning to hit the markets again. Why such a long gap?
I guess as organizations, we all want to decide when is it best to be private and grow while being a private company, and what is the right time to go public and make sure that you can perform as a public company. We think that the balance is right at this point in time. We spent the last few years strengthening our internal growth. We've grown a lot over the last decade. We've strengthened our internal controls and processes. We have a very strong board and a very high level of governance, and we think we can consistently perform as a real estate development company, and therefore we think it's a decent time to go to being a listed entity now.
Are the market conditions right? You feel that now with the markets at an all-time high, not the broader markets though, and I won't get into technicalities of equity markets with you, but do you think the market conditions are favorable to IPO right now?
I think there's a very short view of saying that what is the right time. I don't know of anybody who I've met so far who says I knew exactly what was the right time to list my company or to do QIP, etc., etc. Like I said, it's about a company which is ready to perform consistently, and if the market gives a little less value at the start, it'll give more in due course. So we're not really worried about what's the right timing. What we're focused on is delivering on our business. The value and market perceptions are surely going to reflect that.
And you're confident you can change that. So in 2009, you filed your IPO papers and you were wanting to raise about 2,800 crore rupees. This time around, it's 5,500 crore rupees. That's almost double of what you were seeking previously.
Well, I think these numbers can sometimes mislead. Just to as a different company a decade ago with a different level of dilution, there was a different raise. I don't think it's really relevant for the purposes of today's discussion. We are looking to raise just under 5,000 crores now, and that will be used largely to deleverage. We are focused on becoming a very low debt, zero debt development company over the next 3 years, and have all of our debt supported by our rental assets. And really, the IPO would help us to take a step in that direction.
You have been on record, in fact, that you are willing and you want to take Lodha to being a zero debt company and improve your debt equity ratio. What is the debt currently on your balance sheets, and how much are you looking to retire from the proceeds of the IPO?
So we'll retire about 4,500 crores of debt after the IPO. After the IPO, we'll have a debt of about 13,500 crores, which is a debt equity of about 1.6. That's where we'll be.
And how much would that make the residual debt stand at?
Like I said, about 13,500 crores will be the debt after the IPO, about 1.6 debt equity.
Fair point. You posted historically great numbers in FY16, and I've been just digging out info on your company. But FY17, I understand, wasn't all that great. I know you can't disclose your FY18 numbers, but just give me a historical sense of what kind of revenues and PAT have you been generating.
So FY18 numbers are now updated, and they are in the public domain. We'll actually be going public with our June results for even FY19. So FY18 we had a PAT of just under 800 crores, and that was a PAT growth of over 30%. And we on the collection side, we collected over 8,500 crores from our customers. We had revenues of over 9,000 crores. Most importantly, we delivered over 11,000 units in FY18, which is not only by far the largest delivery in India, but actually is the largest delivery of multi-storied homes and offices anywhere in the world outside China. And that really is what we think is driving us. We are a large scale organization which is focused on delivering high quality housing with a big focus on mid-income affordable housing, and that's really what as a company is driving our growth.
I was just going to come to that, in fact. Is that a conscious strategy to move away from premium real estate into affordable housing, with the government's push as well being an added kicker?
We as a company started doing mid-income affordable housing way back in 2009-10. So we've almost been doing it for 8-9 years now, way before it became the buzzword or there were government incentives. The reason we started doing it is because we believe in mid-India. We believe that India is going to go meaningfully, and a big part of that growth is going to be driven by the middle class of this country. In every industry there is a player who understands what it takes to serve the middle class, and that player takes an outside size of the growth. So in automobiles you have Maruti. In different industries you have one player which is able to understand what the middle class wants, and we believe that we are that player in real estate. Last year almost 50% of our sales came from our mid-income affordable housing portfolio, and that's spread over multiple locations: Palava, Amara in Thane, Upper Thane, Mira Road, and so on. And we have a replicable model of doing mid-income mixed-use large-scale developments, which we think is very unique, and nobody else in the country has figured that out. And we put the whole ecosystem together. We get in the education, we get in the retail, we get in the sports, we get in the governance, the infrastructure, and it truly creates a vibrant community with that we do. And we believe that our focus on delivering that is a unique competitive advantage. It was a strategic choice, and we think we are way ahead of any competition when it comes to doing that well.
Great. So if I were to ask you what your revenue pie is looking like as per your last reported financial numbers or calculated numbers, how much of it was rental income as a percentage of sales, how much was affordable, how much was luxury?
Sure. So we divide our business into three segments. There is the rental business, which is offices and retail. Then there is the affordable housing business, which is what is classified as affordable housing, where the buyers get the CLSS subsidy. They are entitled to receive the 8% lower GST, etc. All the incentives and the focus of the government. And then everything else, which we call premium housing, but it also includes mid-income housing. So for us, affordable housing are homes which are between 35-40 lakhs up to maybe 75-80-90 lakhs. It's not anything above a crore, that part of the business last year, like I said, contributed just under 50% of sales in our development business, and the balance came from the mid-income and the premium housing. And then our rental business is growing. This year we'll have an annualized rental flow of about 200 crores, and that is intended to grow significantly. We have almost 10 million square feet of rental assets under development.
Okay. What is the status on luxury projects?
So clearly, if you look at real estate, and I would like to correct some misperceptions about real estate comprises of various subcategories. Just like in the TV space, you have entertainment channels, you have news channels, you have business channels, and so on. And nobody can really say the TV space is doing well or the TV space is not doing well. All categories are different. Yeah. Equally, within real estate, you have premium housing, you have mid-income or affordable housing, you have offices, you have retail, you have logistics. And except for premium housing, all the other categories are doing exceptionally well. Our affordable housing mid-income business is going great guns. Our office business is doing really well. Our retail business is doing really well. So
but is luxury that sore thumb?
So the premium housing business is clearly not performing at par with the others. There has been oversupply in that market, and prices have corrected. We think prices have bottomed out and are now starting to see that demand is getting stronger. But clearly, other than premium housing is the slowest performing part of the real estate market, but everything else is doing exceptionally well. And I think whether as an investor or as a buyer, you need to recognize that fact, because you might otherwise miss the opportunity if you don't differentiate between premium housing and different different categories in real estate.
So is your focus going to be now more affordable housing, or is it going to be more premium, as you call it?
No, absolutely affordable housing. We have huge amount of supply of affordable housing. We own enough land that we can build 4 lakh affordable housing homes on the land we already own. So affordable housing is going to become a more and more bigger part of our business. And like I said, it's not only about affordable housing, it is about creating the entire ecosystem which allows a mid-income earner to give the quality of life that all of us dream of. Our dreams are not different. Somebody may earn 50,000 a month, someone may earn 5 lakhs a month, but our dreams are the same, and that's what we think we deliver very, very successfully in our mixed-use mid-income housing projects.
What is it that you're doing with regards to the unsold inventory in the premium segment? How is it that you, well, get rid wouldn't be the right terminology, but how is it that you ensure that it sells?
I think the premium housing segment is driven by quality and delivery. So last year, for example, FY18, we sold about 3,000 crores of housing in the island city of Mumbai. The island city of Mumbai, as you can imagine, is all premium housing or even more, right? And that's really driven by the fact that we complete our projects, the quality people can see, and therefore people buy. So really on the premium housing side, our focus is on completing projects with a high quality, and then the demand is there for the right ticket price. The other thing you also have to take into account that premium housing is a very wide segment. You know, somebody can call 5 crores premium housing, somebody calls
Absolutely.
50 crores premium housing. Yeah. So again, it confuses people. In Mumbai, and Mumbai of course is an expensive real estate market, but everything between 4 crores and 10 crores continues to sell. Over that number, it gets difficult, and we have very little of our product priced over that. We don't build, you know, homes which are priced at 50 crores and 25 crores in lower parel. We just don't do that. We price ourselves in line with the desirability as well as the incomes of the segment which wants to live in a particular part of town.
How much unsold inventory are you sitting on for your premium segment?
We'll have about 3 years worth of supply. So if you look at 1 year of sales, we have 3 years of supply.
Quantify that in square feet?
So quantifying that in square feet will be about 3 million square feet.
And you hope to get?
So like I said, we sold about 1 million square feet last year. It's about 3 years.
Okay. Tell me about your ongoing projects, and I understand it's a large number, 37 of them.
You know, like I said, we have been India's largest real estate developer for several years. We are a very decentralized organization. We have very good talent, and we divide our business into regions, and each region is run by a CEO who has all the decision-making powers, and that really helps our business be much bigger than anybody else.
So let's go through each project which is currently underway. Out of this 37, how many are affordable? Which are the premium segments that you currently have work ongoing as of now?
So I think 37 will bore you and your viewers.
No, go for it. We have all the time.
I'll focus on the 6 big ones which make up about 80% of our business. We have Palava, which is a new city development. It's located on the outskirts of Navi Mumbai. It's about an hour's drive from South Mumbai and about 15 minutes from where the Reliance Group headquarters is, about 20-25 minutes from Airoli, and 25 minutes from where the new airport is coming up in Navi Mumbai. That's a mid-income mixed-use development where we have a large, huge population already staying. More than 1 lakh people are already staying. More than 30,000 homes have been sold. More than 23,000 homes have been handed over. We have, you know, everything, mall, school, etc., etc., everything in place. And it really is a place where anybody who comes from abroad says, wow, if this can happen in India, then India has great potential. Now the new workspaces have started there. The first office building is ready. HDFC Bank, which is India's leading financial services organization, is the anchor tenant, and we expect that with all the big growth in financial services in this country, if the front office is in Mumbai, the mid office is in Mumbai, why should they go for back office anywhere else when they can get high quality,
sensing opportunity there.
High quality cheap office spaces around Palava. A lot of infrastructure is coming up in Palava. The new metro is expected to come over there.
Could Palava be what Gurgaon was to DLF for you?
I think Palava will be to Mumbai what Gurgaon was to Delhi. It provided an opportunity for better living, but just that Palava is better planned, has better governance, better infrastructure. So we think it will be a better version. You know, Gurgaon was great for its times. It's just that we are following, so we can learn and improve upon it. So that's
no waterlogging.
We hope. Well, we've seen many monsoons and we've never had it. So that's one project. That's about 20% of our sales. Then we have Upper Thane, which is located on the outskirts of Thane. This is again one more large affordable housing project. It will be eventually have about 20,000 homes there. Again, similarly mixed used, high quality mid-income housing. That's about 10% of our sales. Then you have Amara, which is located in Thane, and a third of our large affordable housing, mid-income housing projects. This is a project which has broken all records. We delivered 8 months ahead of schedule in this country, where people talk about how many years behind are you. We delivered ahead of schedule, and it's really, you know, something changed the perception of what good mid-income housing can be. That's another 17-18% of our sales. So together, these three and a couple of smaller affordable housing projects come to about 50% of our sales. So those are three big ones in the affordable. Then on the premium side, we have New Cuff Parade, which is located located in Wadala, which is sort of at the cusp of where the island city starts in Mumbai. It's mixed use again, residential and office space and retail. The first office building is ready, and as you're aware, there is a new road being built from BKC to Sion, which will make the travel, that bridge is almost ready, is imminently going to open, which will make the travel distance from BKC to New Parade about 7 to 10 minutes, which will make it very, very accessible. Also BKC, also New Parade is accessible from the Eastern Freeway, so from South Mumbai you get there very quickly. So that's the fourth large project. Then we have the park. This is a land in central Mumbai. It's 6 large towers, including the Trump Tower, and 4 of those towers are now approaching completion. They'll all be completed in this fiscal year. And that,
will you be inviting Donald Trump or Ivanka to launch the project?
They're not involved with the Trump organization anymore. And then we have the World Towers, which is also located in central Mumbai. So those are the 2 other premium housing. So these are our 6 projects, 3 large mid-income housing projects and 3 premium projects, which are sort of all approaching completion.
There are 2 international projects also, right, in UK. How are they doing? Because the talk was that you've burnt your fingers with those 2 projects.
So the 2 projects have done reasonably well. We complete one this year and one next year. We will make a reasonable return there, under 20% IRR. So we're definitely not losing money, but it's not necessarily the highest return we've made on anything. Yeah.
Tell me, how are the market dynamics doing right now? Because, you know, when you interact with real estate observers or some of the other real estate companies as well, the sense that you get is that they've been badly hit, firstly because of demonetization, then because of RERA coming into being. How's the market scenario? What's the landscape looking like?
See, again, I think it's driven by asset class. When you ask that question, just check what segment does that player focus on. You ask an office operator, which an office developer, they'll be very, very bullish and gung-ho. You ask a mall.
I'm talking residential.
So like I'm trying to say, real estate in that sense is much wider, and I'm coming back to my earlier point. Equally, a mall operator, very happy. Logistic players going great guns. Mid-income housing, we are the largest and we are probably the only large organized player, very, very happy. So it's only the premium housing, again I'm repeating, which is slow. But unfortunately what happens, most of the influencers, most of the people like you, we're all in South Mumbai or South Delhi. So we see premium housing and we think this is all that real estate is, but it's not.
What are the subsidiaries currently in the company, and would it be, when you list, would Lodha then be a combined consolidated entity which would have your subsidiaries as well? Yeah,
the listed entity controls all our business.
Okay, so tell me a little bit more about them and the financial health.
No, the subsidiaries are essentially in real estate. We have for individual projects, you sometimes make separate standalone companies. Okay. So that's really, so it's not really a subsidiary in the typical sense of the way where you have a different business happening. So they are all consolidated into the balance sheet. So if you look at the consolidated balance sheet of the company which is intended to be listed, you get the full financial picture.
Is it true that the National Housing Board also cancelled your certificate of registration which was granted to Lodha Housing Finance Private Limited?
No, so Lodha Housing Finance Private Limited is not a company. Lodha Group, we read that newspaper report, is inaccurate. It's nothing to do with Lodha developers.
But it is a group company.
No, it's not a group company.
It's not a group company. Okay. What are the new land parcels that you're looking at acquiring? And I'm guessing, if at all that be the case, that would be in the affordable segment.
No, so right now, like I said, we're very focused on deleveraging. We want to get to a debt equity of 1:1. Like I said, we'll be 1.6:1 after the capital raise. Over the next 2.5 years, we want to be at 1:1, and that too with nothing on the development company. Our DevCo being completely debt free, and only the rental assets which have debt associated with them. So right now there are no big land related intentions.
Okay, great. Eventually, Abhishek, it's going to be all about how you price your IPO. You know, we can sit here and discuss the dynamics of the company and industry or whatever have you. As a promoter, how is it that you value your own company? Because there's no bigger insider than you. How would you like to price the per share value for Lodha?
See, the way I think about it is that, you know, we're much larger than most other peers in the marketplace. So you have to look at the different parts of our business and do a comparable there. So you do premium housing, then you compare with 2 or 3 of the big players who are in premium housing. You know most of the premium housing players well. Affordable housing, there are a few smaller listed players. You compare with that. Office rental income, you compare with that, and then you do an aggregate of those different valuations to come to an estimate. We believe, and we have been advised by, you know, what I would say are some of the best, most highly respected names in the financial services industry. We're going to leave a lot of value on the table. This is only our first capital raise. We're diluting 16% or so. So, we have no hurry to grab everything. We're going to, leave a lot on the table. We saw a few weeks ago a very, very successful IPO, and that's an inspiration for us to follow.
Indeed. Any message for the investors who would be watching this interview? Because, I mean, after HDFC AMC, which you only hinted at, this is one of the biggest IPO which is going to hit the market.
Well, I can only say is that mid-income housing and affordable housing is something that you have to understand the sentiment of a middle class family, how much they value their home, how much they need their home, and how much they are willing to do to make sure that they get a good quality home. India will be a 10 trillion economy sometime in the next 15 years. And as that happens, the growth or the need for mid-income housing will grow 10 times in the next decade. And Lodha as a player is well positioned to deliver on the aspirations of mid-income India. And you should think of Lodha if you believe in the aspirations of mid-income India.
Are all the clearances in place? Are we going to see the IPO finally see the light of day?
Yeah, we received our final comments on the DRHP a few weeks ago. We're in the process of updating some of our documents, and of course, till it happens, nothing has happened. But we seem to be on track. Yes.
Okay, great. Good luck with that.
Thank you.
We'll speak again
Thank
when
you
you list. Thank you so much.